So here's everything you need to know about today's Fed meeting. What's going on, team? It's Ricky with TechBud Solutions. We actually live streamed the Fed meeting when Jerome Powell spoke and also answered questions. I'm going to keep it super short and sweet. Here are three things that you must know. The first thing is, yes, they did raise interest rates 0.75%. This is the first time since 1994. So I can say the first time in my lifetime that they've raised interest rates more than 0.75%. A question you might have is, well, why did the market go up? Because if you guys actually look at my screen right now, you can see that TQQQ, which is the NASDAQ ETF, right? This one goes up when the NASDAQ market goes up. You can see that it hit highs of 25.92. I mean, that's 11% gain on the day. Ended up closing at 7.19%. And then after market hours, it ended up hitting highs of 25.50, being up an additional 2.5%. Altogether, up nearly 10% on the day. This is great for the NASDAQ market, but why? Well, I don't know if you guys were paying attention to the market just a couple of days ago, right? The CPI data came out, the market sold off. And then, well, I'm sorry, this was on Thursday. And then the CPI data came off, and then we saw that additional sell-off. We saw it really flatline for the past 2 days. This was Tuesday and Monday. And again, when asking the question, why did they sell off so aggressively on Friday when the CPI data came out? And why did it sell off so aggressively on Monday? On Friday, it's very obvious. It sold off because of the CPI data. It showcased that inflation did not peak. It was thought that 2 months ago at 8.5%, that interest rates peaked because the month after we hit highs of 8.3%. So from 8.5 to 8.3, that's progress. But then this month, we ended up reporting as of last Friday, 8.6% for the month of May, showcasing that inflation did not peak because it went from 8.5 to 8.3, and then now we're back at 8.6. So on Monday, it was obvious that the 0.5% that the Feds have been focusing on when it comes down to raising interest rates per month was not actually doing much. So with that being said, the market factored in that we were going to have to take a more aggressive approach. That was factored into the market. This is something, if you're a little bit newer to the market, it takes time to understand, but things get factored in right away. With real estate, it takes time, right? Even right now, we're seeing a slowdown, meaning that properties are staying on market or for sale a little bit longer than what they used to be, right? Because it's less desirable due to higher interest rate and not so attractive prices. But with the stock market, it gets factored in instantly. And this is something that you have to understand. Sometimes the reaction actually ends up being an overreaction. And I think this is why we experience what we experience today. With that being said, if they only raised interest rates 0.5%, I think that the market actually would have acted more bearish than bullish, because one thing that Jerome Powell did say is that I would rather not have to play catch up later down the road. So the Feds are taking a very aggressive approach and not needing to give it more time to kind of like one of the things that he said during the Fed meeting is, imagine if this month, right? Because the CPI data just came out last Friday. So they had to meet this week and make a decision. They could have been like, oh, wait, but let's give it a month and see if we actually need to take a more aggressive approach. And what Jerome Powell said is like, no, we all agree that I would rather take it head on right now and take a more aggressive approach at 0.75%, right? 0.75%. And then later on, I at least have more to work with if we're actually seeing that we're having a positive influence on the inflation rate. And I think that's 100%, in my opinion, feel free to share yours in the comment section, the right way to do it. I would rather not have to play catch up, as, they're already kind of needing to play catch up. With that being said, one of the things that he did say is he didn't say that he would increase interest rates 1%, but he said that him and the Federal Reserve will do anything that is needed to make sure that they tackle down and fight the inflation that we're experiencing right now. For those that are unaware, inflation is at a 40-year high. This interest rate hike that we just experienced is one of the most aggressive interest rate hikes that we've experienced in nearly 30 years. Again, a fun fact to know. So I wanted to share one last thing with you. Actually, two last things. I'm going to share my screen one more time. One of the first things that I want to share with you is that on Friday, I like making you guys aware of what to look forward to. On Friday at 8:45 a.m., Jerome Powell will be speaking. This is 45 minutes before the market opens. Please be aware of it. If you're part of my Learn Plan Profit group, I'll make sure that I share the link, and we could possibly even just go live during the pre-market session, but I'll talk to you guys a little bit later. Also, one of the things that I wanted to share with you is that today we went up nearly 10%. This is kind of like deja vu. And the reason I say that is because nearly a month ago, again, I am not saying that the market's going to sell off tomorrow, but nearly a month ago, you guys can fact check me. Nearly a month ago, on the 4th of May, there was another, again, Fed meeting. And they announced that they're going to raise interest rates 0.5%. The market reacted in a bullish way. This is what we're seeing. I want to zoom in a little bit more for those who are maybe on an iPhone. You guys can see May 5th, right? It was selling off all day. And then all of a sudden, about 1 to 2 hours before the market closed, it took off. It ended up closing nearly 10% on the day. Guess what happened the day after? It sold off and gave it all back. 14% down on the day. The day after was where they saw most of the bleeding. The reason I'm sharing this with you is that today we kind of experienced a very similar setup. If we go to where we're at right now, let me go ahead and zoom out. If we go to where we're at right now, I'm gonna have to zoom out of this. But if we look at today's overall, breakdown, we could see that, again, we took off on the later half of the day and we nearly hit 10%. A lot of people were scratching their heads asking if, hey, is this actually something that is going to cause the market to skyrocket? No, in my opinion, I don't think so. I just want to make sure for those that are thinking of taking a very aggressive position size to understand what happened last time the Feds increased interest rates 0.5%. Just wanted to make sure that I do my part in making you aware of not just what was said today, but also what has happened in the past before, as that's all I'm here to share with you. I can only speak from my experiences and just making sure that I do my part in making you aware of not just all the good that the market offers, but of course the risk in place, right? I think now is a great time to begin to prepare for long-term investments. I don't think it's the best time to try to force day trades. And I'm telling you this as a day trader. It's not that you should be scared. It's just that you should be selective, especially if you see that market sentiment and market direction is not in your favor. I appreciate you guys' time. I hope that this was probably maybe a quicker video than all the other ones out there. If you learned something new and if you enjoyed it, please make sure you drop a thumbs up. And also feel free to subscribe. I upload new videos about the stock market every single day, and I'd love to keep you updated. I do trade live every day with my Learn Plan Profit group, so if you want to learn a little bit more about that and maybe joining me as soon as tomorrow at Market Open, click the second link down below of this video. Also, if you guys want to join my free trading group chat, it's 40,000 members. It's for free. It's the first link down in the description. Other than that, I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take it easy, team.